Hey, I've been researching an insurance company and I wanted to pass along some of this information to you. If you're interested in that, as well as an update on my portfolio for the last 2 weeks, stay tuned. Hey guys, Kevin Burgess back again with yet another video. I wanted to share with you some information on an insurance company that I've been studying. It's something that I've talked about before. The name of the company is Fidelity National Financial. I own a few shares of it. I think I own 100 shares of Fidelity National Financial, ticker symbol FNF. So I wanted to share with you the research that I've done and what conclusions that I'm coming to. At the end of it, we'll talk about both the pros and the cons. So my goal on this YouTube channel is not to try to talk you into any stocks that I hold. My goal is to try to share with you what I've learned so that we can grow together in this dividend investing process. So I want to share all of that with you. I want to tell you what the pros are, what the cons are, at least from my perspective, and what I plan to do. You get to make your own decision around that, whether you want to invest in it, whether you don't, and at what size you would want to do that. Also, it's been a couple of weeks since I've done a video, and I hate that because I like to do videos on a consistent weekly basis. But it just did not work out last week for me. So I apologize for not putting a video out, but I appreciate you being here for this one, and I will try to be much better as we move forward. So with that, let's dig deeper into Fidelity National Financial. Well, I'm going to utilize their investor update in the fall of 22. I think it was a month or so ago. So I think it's pretty relevant, pretty timely information. And we want to answer questions like who are they and what do they do? So let's move to slide 5. On slide 5 here, we can see that they really have 4 businesses that they point out. One is a title insurance business. This is when someone buys a home, the title for that home is insured, and you have certain insurance companies that are in this business, and Fidelity National Financial is one of those, and it is probably the lion's share of its business. These 3 pieces here, which are the title insurance, mortgage and real estate services, and real estate technology, are about 75% of their business, while the annuities and life insurance is roughly 25%. So they are basically an insurance solutions company overall. So let's move on then to slide number 8. You can see that in total here, the company Fidelity National Financial is a market leader in the title insurance business. They have about 33% of the market. Their next competitor would be First American, which has 24%. So they would have, significant scale with 1/3 of the market of title insurance. Moving on to slide 14, something I found interesting is that their margins are typically higher than the average of their competitors. This doesn't compare to each competitor, but the average of the competitors. So I'm not really sure if there are other competitors who are better than them, but at least compared to the average, they are well above that. On slide 15, there's been a lot of news lately about them spinning off this F&G segment and issuing 15% of that as a dividend to current shareholders. The F&G segment is a retail annuity and life insurance company. And the way they make money, we can see on the next slide, is that they basically charge premiums for insurance. They then have those premiums become part of their assets, part of their cash, and that cash then is invested in in the marketplace, and the yield on those investments produce income, which drives more assets under management as well as earnings. So F&G again is about a quarter of their business. They've spun off 15% to shareholders. And in order to be successful in this business, F&G really needs to have good governance as well as expertise in both investing and in risk management. One of the things I find intriguing about F&G is that they have partnered with Blackstone, not as a fiduciary, but as someone who who provides, markets for them to invest in and provides expertise in the area of investment. And I think that's a key point for F&G moving forward. On slide 22, they mention that not only about their common dividends, but also about share repurchases. And it looks like they have done a lot of share repurchases here lately, with $511 million being done year to date through the third quarter of 2022. This is not easily seen on some of the longer term data we're going to look at, but I think it's interesting that they are increasing their share repurchases during this time of where their stock price is low. And I think that's really what, as a management team, we want them to do. And then lastly, we talked about this a little bit earlier, but so it says here that they plan to distribute 15% ownership of F&G. They've actually accomplished that on December the 1st. Every FNF shareholder got an allocation of F&G shares. I think it was 6.8 shares per 100 shares of FNF. And that should just show up in your brokerage account if you were an investor in FNF at the time. So they're basically an insurance solutions company with their hands really in a lot of pies. They've got the title insurance pie, they've got the annuity pie, life insurance pie. So they've got a lot of things going on. So now let's come over here and take a look at some of my favorite apps. This is Simply Safe Dividends. So one of the keys here for me, and this would be for my high dividend yield portfolio, is it's got a dividend yield currently of about 4.8%. So that's a nice dividend for my dividend yield account. They've rated them a 58 out of 99, so they are borderline safe, and we'll see why that may be here in a bit. The dividend growth for this past year was pretty low at 2.3%. But I think we're going to find out that that's actually probably a pretty good move from the management team. So let's move on then and talk about their 5-year CAGR. You can see here that the last 5 years, they've grown the dividend by 12% per year, which is very fast. However, as we mentioned, in the last year, they grew at only 2.3%. I think there's some economic data that would actually support this number. Their dividend growth streak is 7 years. My criteria is 5 years, so this actually works for my criteria. And then looking at some of the financial data, their payout ratio is, at least for the next 12 months, what's projected to be their payout ratio is 35%. The last 12 months has been around 27%. These are really good numbers. 60% or below is what's considered preferable for most companies. And then also looking at their free cash flow payout ratio, look at this 11%. That's pretty low. So from a payout ratio perspective, the borderline safe dividend rating really doesn't make a lot of sense, because from a free cash flow perspective, they're at 11%. And even their projected earnings payout ratio is 35%. Some of the key metrics I look at are return on invested capital. You can see that it's been growing over the past, 8 years. Was around, 10, 9, 8%. And now it is ballooning up to around 26%. So I like to see that up and to the right, return on invested capital. Their net debt appears to be zero. And what that means is they have more cash on hand on their balance sheet than they have debt. So if they wanted to, they could pay all of their debt off today and still have cash on their balance sheet. And so let's take also a look at the interest coverage ratio. This says really how many times their earnings can cover their interest expense. And you can see that it's about a 19 times over the last 12 months. So the debt that they're carrying is very manageable for them. So that gives us some of the background and some of the financial data. Let's take a look now at valuation. And I like to look at fast graphs, at least as one source. And you can see I have this set on 7 years for Fidelity National Financial. They have really been underperforming since 2019. They are well below where FastGraph says that they would be. So another service that I use is Morningstar. Now Morningstar, you can tell by the Q here, Morningstar does not track this company, but they do have an algorithm that calculates a fair value, and they've got it calculated at $42.75. The stock's trading today, or at least closed on Friday, with $37.33, which means Morningstar saying, hey, it's at a 13% discount. Now, another source for intrinsic value is this alpha spread. I see some of my friends using this, like Russ with Dapper Dividends and Ryan Williams. They're using this alpha spread as an intrinsic value calculator, and it looks to be pretty decent. So if you haven't seen this and you haven't tried this, certainly go on here and look at this, and it may be part of what you would use then to value stocks. But let's take a look then at Fidelity National Financial here. On the base case, they say that Fidelity National Financial is worth right at just under $60 per share, which means that they are 37% undervalued. Now, the worst case scenario that Alpha Spread uses says it's worth $46.22, and therefore it is 19% undervalued. And let's take a look at one more thing. In Seeking Alpha, there is a price target here. This is the Wall Street price target. I don't typically like price targets, but for this, I thought it would be interesting to see that the average price target is $50, which is a 35% upside from the $37.33 that it has closed at on Friday. So why do I not like price targets? I don't like price targets because they're typically going up. If it's going down, you wouldn't buy the stock. So, Wall Street is looking for the market always to go up unless there's something specifically wrong. It'll be rare to see price targets that would actually come down. So let's look at some of the economic data. You can tell here that and this is the chart of existing home sales over the last year. You can see that existing home sales in January of 2022 was around 6.5 million, and now it is down around 4.3 million. So let's take a look at a little longer period of time here. Let's look over the last 5 years. You can see that existing home sales are approaching the lowest in the last 5 years, and the pandemic is the last big dip that was lower than we currently are now. Let's look even further back. Here's 10 years. You can see that it's still lower than in the last 10 years. And then let's take a look at 25 years. Only during the great financial crisis were home sales lower than what we're seeing right now. So if home sales are lower, then title insurance is therefore going to be lower. Okay, so what are the pros and the cons of Fidelity National Financial? The pros are they have solid financials. Their payout ratios are good, both earnings and cash flow. You've seen their financials. The second one is they have really good capital allocation. And as we saw, the economy from a housing perspective is looking pretty rough. And so management decided this year to slow down the growth of their dividend. And I personally think that that's a pro because management is really taking not only the short term, but the long term seriously. So I find that to be a pro for Fidelity National Financial. The other pro is that they're trading at a significant discount. No matter which service you look at, they're at a significant discount to their fair value. So let's talk about some of the cons. One of the cons is something I really didn't show in the analysis, but insider trading has them actually selling shares over the last 12 months. So we like to see the insiders buying because this tells us that they believe the price is going to go up. I've heard it said that there's many reasons to sell a stock, but there's really only one to buy it, and that is that it's going to go up in the future. The second con is that there's an uncertain real estate market out there. So, it really depends on what your view of real estate is going to be. Are the real estate transactions going to continue to dive? And if they are, it's going to put pressure on earnings for Fidelity National Financial. This other risk that's out there is that the financial markets are going to be pressured because, some say that the market's going to come back in 2023. Some say it's going to stay the same in 2023. Others say it's going to go way down in 2023. So whatever you believe about that, the assets under management for F&G insurance, which Fidelity National Financial, remember, still owns 85% of. Those earnings will struggle if the financial markets struggle in 2023. So, given all of that, I see Fidelity National Financial as more of a long-term play. Yes, they have a dividend that's 4.8%. Simply Safe Dividends has them rated at a 58. I think that some of the history, great financial crisis, they reduced their dividend. So they've got a history, at least it's more than 7 years ago, but they've got a history of reducing their dividend. So we got pros and we've got cons. And what I think about Fidelity National Financial is that it is more of a long-term play. And so as I look at entry into this stock, I'm looking for a price somewhere below $35 per share. It's trading around 37, 33 at the close on Friday. I'm going to be looking for 35 or below. And at that point, I may pick up some more shares. I am not backing the truck up and loading up on this stock, but I do think it's a good stock. It has a lot of potential for the future. So, I'm thinking that anything, at least for my portfolio, anything below $35 a share is something that's going to be kind of attractive to me. So I may pick up a few shares here and there. Now, let's take a quick look at the portfolio performance over the past couple of weeks. And since it's been a couple of weeks since I updated you on the portfolio, let's take a look at both weeks. For the week ending December the 2nd, you can see that the portfolio was up 0.3%, while the S&P was up 1.1%. That put me up at the time 1.4% versus the S&P being down 15.1%. And then, if you add in the dividends that I've gotten, my total returns around 4.7%. So that was really good. And then all of a sudden this week happens. And then the week ending December the 9th, you can see that it went down about $27,000. And that was about 2.9% of the portfolio compared to the S&P, which went down 3.4%. So we actually didn't go down as far as the S&P. However, it did push us down on a year-to-date basis to now be back down 1.9%. But if you add the dividends back into the equation, we're still up on total return of 1.4%. The S&P 500 year-to-date through December 9th is down 18%. Okay, so there you have it. My thoughts on Fidelity National Financial, ticker FNF, as well as the performance of the portfolio over the last couple of weeks. I'm glad to be back. So I look forward to seeing some more videos from me this week. And as always, if you are a dividend investor and you want to grow in understanding how to look at and analyze dividend stocks, consider subscribing to the channel. I would really love to have you along for the journey. And with that, I'm going to get out of your hair and I will see you on the next video.